Hello, everyone. You're joining me for another promising episode of my weekend series dedicated to the art of price action based technical analysis. As we gear up for the upcoming week, the gold asset will be the first on our watch list one more time. So, the previous trading setup for last week, as you will be seeing in this commentary, resulted in over 600 pips in our favor. We actually capitalized on both buy and sell opportunities as market participants reacted vigorously to the fundamental factors that was churning out from the US economic docket, hereby providing us with a wealth of trading opportunities to bank on. And for those of you who were part of this profitable journey, well done and kudos to you guys. And for those of you who missed out on the daily commentary on these assets and wish to catch up for educational purposes, you can find the link in the description box below or at the top right hand corner of your screen if you're watching on my YouTube channel. Well, with hawkish comments from the Fed Reserve Chairman, gains in the US Treasury yields, and a strengthening US dollar, the price of gold has been on a downward trajectory. Now, the question on everyone's mind is, will this bearish momentum persist? And if so, how far will it extend before another wave of bullish momentum will happen? Well, in this episode, we will be scrutinizing the current market structure from a technical perspective, utilizing fundamental tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory of price action in the days ahead. But before we delve into these details, it is essential that I emphasize that this video is for educational purposes only and should not be considered financial advice. My goal is to provide you with insight into the XAUUSD chart and to enhance your understanding of price action analysis. Remember, Forex trading inherently carries risk, so always exercise caution and consider consulting a professional financial advisor before making any investment decisions. Without further ado, let's dive right into the business. So let's start our analysis by examining the daily time frame, and as you can see here, the current setup is consistent with what we identified in my previous video. However, it is crucial to emphasize the significance of the breakout of this descending trend line, as it will provide the foundation for next week's trading setup. Now, if you remember vividly, I laid emphasis on the series of lower highs here since the month of May, which captured this market, and finally about 3 to 4 weeks ago we witnessed how price action did break out of that trend line back into the $2010 area. Now, from a technical standpoint, whenever we cite a breakout of a structure or a significant structure like this, we do expect that at a point in time there will be some profit-taking activity, which will probably incite a retracement move back to a retest of the structure that was broken in anticipation of an uptrend situation. Now, if you look at what has been going on here in the last couple of weeks, first of all, we notice how, as usual, buyers found it difficult to break through that $2010 area, which I emphasized to be a strong selling niche in this particular market, as you will see what has been going on in the past around this level. Now, we see price has dropped significantly in the last week, and price is gradually approaching that descending trend line that was broken. So at this point in time, we are at a crucial juncture in the market where I have my key level situated at the 1,945, and it appears we have price action breaking down that key level a little bit on Friday. Now, will this key level be further broken to the downside to give us a situation where price will be back into that demand zone, which is between the 1,900 and the 1,890, which of course also lines up with that descending trend line to incite an uptrend move? Will price get that far? How will the uptrend move begin right here at the 1,945, where the appearance of buy pressure will incite that move to the upside? Well, to answer this question, I have a simple setup that we will be using on the 4 hours time frame to guide our trading decisions for this week. But before we go into the 4 hours time frame, it's very important that we take a quick look at the economic calendar to familiarize ourselves with fundamental factors that will be affecting the market sentiment this week. And on the economic calendar, based on the assets we are looking at, we will be focusing on high impact events from the United States. And for those of you who have been with me for a while now, you know how important this is, as these fundamental factors often manifest on the charts in technical patterns and price movements. By monitoring the economic calendar, we can identify potential correlations between key economic releases and specific technical patterns on the chart, hereby giving us valuable information needed to position ourselves in such a way that we can capitalize on any potential move prior, during, and even after these economic events. Now, on the economic calendar for this week, we have a handful of high impact events. The first one is coming in on Tuesday, November 14th, and that is the Consumer Price Index. This is a very high impactful event which gives us an insight into the inflationary status of the United States economic docket. Then on Wednesday, November 15, we have the Producer Price Index, another impactful event which measures the changes in input prices for producers. Now, on that same day, we also have the retail sales data, another event everyone will be looking forward to. And with the information we have gathered here, and as a technical trader, we know that the anticipation of this event also has an influence on the market sentiment, which would reflect on the chart as price action. Now, talking about price action, let's scale down into the 4 hours time frame. And here on the 4 hours time frame, what I did here was to take into consideration the nature of price action since the beginning of the month of October. Well, it's quite clear that price action has been very bullish throughout the month of October, but the most important factor here is this range which has gripped this market since the mid-month of October. And one thing you will notice here is how price had remained confined within the 2005 and the 1930 area, which further emphasize the level of indecision going on in this market. Now, considering the fact that price remains bullish, we have a demand zone around the 1940, which price action is just right back within the area. And you would agree with me that we are at a crucial juncture in this market, as price is back into an area where sellers have found it difficult to break through in the last 2 to 3 weeks. And right now, price is back into that structure. Now, the question going into the new week is, how will the market participant react to this level? Are we going to be seeing a situation where price will break down that demand zone to incite a bearish momentum all the way back into the 1900 area, which we identified on the higher time frame, maybe to incite an uptrend continuation, or it could in fact go down to break down the 1900 to incite more selling opportunity? So that is one scenario I'm going to be looking at this week. However, if price action does not break down the 1930 and we begin to see buy pressure around this area, which reveals that sellers are finding it difficult to break through the 1930, then we might be getting ready for an opportunity to buy. Now remember that we have our key level situated at the 1945 And of course, you know how we use our key levels. As long as price remains above the key level, we want to be looking out for patterns and structures that support the idea of buying. Now, if sellers find it difficult to break through, I have another structure which I was able to spot here. And in fact, if you look at this structure closely, following the impulsive move that brought us into this area, it appears we have a wedge sort of structure, which from a technical standpoint can be considered to be an uptrend continuation pattern, or you can even call it a flag pattern if you like. Now, from a technical and theoretical standpoint, we do expect that price should break out of that resistant line of that pattern to give us an opportunity to buy. So you can see how crucial the current structure is, as we will need to see how the market participant will be reacting to this area between the 1945 and the 1930 during the early hours of the week to decide what our next line of action will be. But trust me, I will be with you in the comment section of both my TradingView and all my other platforms to give you updates after monitoring how participants react to the structure during the early hours of the week. If you found this content helpful and useful in making your independent trading decisions for the week, I would greatly appreciate your support by giving the video a thumbs up. Your likes are valuable to me and helps the algorithm promote the video to a wider audience of traders who may find the material beneficial. Thank you in advance for doing so. If you haven't already, I encourage you to follow me on this channel for more of this content. By subscribing, you will always stay updated with the latest ideas I share and of course receive notifications whenever I upload new videos. See you all in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye-bye.